It's the beginning of a new trading week. This is Monday, the 22nd of June, 2026, and I'm Mohanad Yakout, Senior Market Analyst at Scope Markets. And in this video today, we will, of course, highlight the key events that you should watch for during the next trading week, or basically the week that starts today. And as I have them listed down here, the key three things to watch for will, of course, be the US inflation, especially after the latest hawkish reset by the Federal Reserve, especially after the new head of Federal, or the chairman, who's Kevin Warsh. How will this affect market expectations? Of course, we will be discussing that. Number two, that we will be having a lot of PMI numbers from S&P Global. Of course, they are the flash estimates. However, we do have economies like the UK, the US, Japan, and even the Eurozone. So pretty much we will have a highlight on how the economy, the global economy, is performing in the latest month. And we'll also discuss a little bit of disruptions that's happening around the Strait of Hormuz. Of course, we will end the video with the technical analysis on the key financial instruments or the trading instruments that you all ask about. Let's dive straight into this video. First and foremost, let's have a look on the trading agenda for this week. And basically, I've only highlighted the very high risk events that we will be watching for during this week. And starting on Monday, today, the 22nd of June, we will be having a fresh round of inflation data coming out of the Canadian economy. And this is pretty much for the month of May. During this period, pretty much all of the inflation numbers across most of the economies globally are expected to tilt higher. So this is pretty much a given. Of course, after what's happened in the Middle East, that's hopefully has come to an end at the moment. But the damage has already been done to the global economy. And of course, we will be seeing some upticks in the global inflation indicators across all of the economies pretty much. But the question is whether this inflation uptick is something that it's sustainable and we will see continuing across the next couple of months, or it's only an uptick or a surge in inflation numbers for only a couple of months before coming back. So the question is really is if those inflation figures are, or the inflation pressures, are they pretty much persistent in the economy, or this is just a supply shock due to what's happened in the Strait of Hormuz and the closing again of oil prices and what's happened. This is the question pretty much at this moment. So when it comes to the inflation numbers for the Canadian economy, as you can see here, we do have the previous reading, which was basically for April, and it came around 2.8%, still higher than the target, 2%. And markets will be watching for, okay, inflation, it's going to be higher, pretty much higher than 2.8%, but is it going to be so much higher or just a tiny uptick? This is basically what will affect, market expectations and traders' expectations around inflation figures, not only in the Canadian economy, but across everything else. Moving on to Tuesday, we do have the PMI numbers from the German economy as well as the UK economy. That's for the S&P and Global, and this is just the flash estimate or the flash reading for the month of June. So why is it that the PMI numbers are really important to watch for during this period? Because we have already mentioned that the inflation numbers are expected to move higher across all of the economies, and this is why the majority of central banks are basically moving to a new policy, which is a higher for longer. So we pretty much won't see interest rate cuts as we expected to see maybe last year for the year 2026, and central banks are moving more to the narrative of higher for longer rates until inflation is back under control. The key question right now for economists is that is the global economy, including most of the major economies, are they in good positions to sustain or to be able to tolerate the higher for longer rates? What's the PMI numbers looking like? What are the GDP numbers looking like? How is the global economy really doing at this period of time where central banks are moving more to a higher for longer interest rate narrative? So this is pretty much why the PMI numbers during this week is really, really important, not only from one economy, but the majority of, how the global economy is performing. Again, we do have the previous readings. I don't really believe that we should move with market forecasts. However, I always compare the new data with what's been already, the previous data that's been announced, uh, comparing facts to facts, not, facts to expectation. This is my way of looking at the economic agenda. Moving on to Wednesday, we do have the business climate for the German economy. Not really a big thing for me here. However, on Thursday, we will be having the high risk event for the week, or the big, really big ticket, which is the PCE inflation data, the personal consumption expenditures. Basically, this is the really important inflation, or the most important inflation metric for the Federal Reserve. Of course, we do have a couple of inflation way or a couple of inflation metrics, or a couple of ways to measure inflation in any given economy. We do have the CPI, we do have PPI, and again, we do have the PCE, which is the favorite way for the Federal Reserve on how to look on inflation. Basically, without mentioning numbers, the key thing is any higher than expected number or hotter than expected. Okay, markets are expecting that inflation is going to be high and it's going to continue moving higher. But again, how much are the increments for this increases in inflation numbers? This is pretty much what our markets will be looking at for the time being. And any hotter than expected numbers, of course, means that, the Federal Reserve will again keep higher for longer rates, or even we can see interest rate hikes as soon as July, or even probably September. This is definitely something that will boost the US dollar across the other basket of currencies. So pretty much the only thing that we want to see from the inflation numbers this week, is it higher than expected? It's good for dollar buys. Is it pretty much still under control? And by under control, I don't really mean that the numbers will get lower, but probably a number like the previous reading for the previous month is something that can be digested by markets as, it's not so bad as expected. There maybe won't be a reason for the Federal Reserve to go and hike interest rates, and this is pretty much how markets will be looking at those numbers. Let's move on to technical analysis here. And we can see the dollar index is pretty much moving higher here. Of course, after, as we said, the hawkish reset by the Federal Reserve during the last week, we have already seen a break and a close above the key supply levels that we have mentioned, I think, during the previous week. We bounced off the supply here. However, we couldn't really sustain the downward momentum, and we saw this upward breakout. The question during this week is, of course, we are expecting to see some retracement for a pullback to retest those supply levels. Let's have a look on the weekly time frame here. Yeah, the weekly time frame, the previous candle close is pretty much a very bullish candle. However, during the beginning of this week, we can expect that this weekly candle will move a little bit lower, just to form the lower wick of this weekly candle. And I really do believe that this level, which we saw on the previous, or the little time frame, the daily time frame, as a key level of supply that we broke above, might turn out to be as act as support during this week, and again we can move higher. So pretty much my bias for the dollar during this week is, I do really believe it's going to continue moving higher. However, it would be pretty risky to go into dollar buys from here. We should wait for a retest lower first. And let's have a quick look on Fibonacci levels here. That's for the Fibonacci levels. The levels 50% are quite far away. I think this can be the levels of 38.2%, or a little bit above that one. So yeah, I really believe the levels of 100.30 are good support levels during this week. We can expect a retracement. After a successful retracement or bullish price action, we can expect a move higher. On the opposite side here, with the euro versus the dollar, I do believe it's a really key area here for the euro buys against the dollar. And this basically shows that, technical analysis is sometimes easy when you look at things in correlation. Because yeah, we expect on the dollar to move lower from here for a retracement. The euro is already saying, okay guys, I'm already near the support level. Maybe the euro will start the week with a move higher against the dollar. That should push the dollar lower to test the supply or the support level that we mentioned. So basically, it's pretty much the same that we expect on the dollar. However, on the opposite side, a move higher on the euro first, just to respect this support. Probably maybe move again lower if the dollar really held above this support that we mentioned around the levels of 100.30. Of course, again, the pound broke below the support. Again, it was a similar scenario like on the dollar, but again on the opposite side. So we had the supply zone, little bit went bullish before breaking down lower because of what's been happening on the dollar strength at the back end of last week. Again, this key level on the pound versus the dollar around the levels of 1.32 are really, really powerful supply zone or support zones. On the pound versus the dollar. So we can expect a move higher from the 1.32 during the beginning of this week. Gold is pretty much doing nothing at the moment. We have traded during the previous week in a tight zone here around the levels of 4,250. For me, as long as gold holds above the levels of $4,020 per ounce, which are the key levels for support, I do expect that we move higher to test the levels of 4,580. And let's have a final look on oil prices and what's been happening on oil prices. Basically, I don't really like what's happening on oil prices here. We did mention last week that the levels of 76.80 on the WTI crude is really powerful support, because of this candle that we mentioned. And at the moment, we are seeing nothing around those levels. We are seeing big wicks here around those levels. So both wicks, the lower wick around the levels of 74 and the higher wick around the level of 80. That's a big zone for volatility on the WTI crude oil. For me, I would definitely remove anything else on the chart for oil now, and I'll just stick with those two levels here. So the higher wick is around the 80.50 and the lower wick is 74. I'll be watching those key levels as not as really support or resistance, but as the price limits for this week. If we break below the 74 dollars and 10 cents, basically I'll be expecting a continued move lower, probably to fill up this gap to 67. I don't really believe this really to happen. Or on the other end, if we do see a break above 80.50, probably a move higher to 85 is something that we can see during this week. So that was all for today's technical analysis and the week ahead for this week that starts today, the 22nd of June. Thanks everyone for watching this, and I'll see you guys in the next video. Thank you so much.